All right, let's take a look at the technicals behind today's big rip higher with the Chartmaster, Carter Worth of Worth Charting. Joined us now. So, Carter, what are the charts telling you right now?
Yeah, hi, team. So before we look at them, what's so fascinating is that every once in a while, or actually more than that, a level takes on a great deal of importance, meaning where the market went to today and where it closed. We know it's not a PE matter. We know it's not a dividend matter. We know it's enterprise value, EBITDA matter, price sales. Often is just technical. Let's look at three charts. They are exactly the same time frame, and I make a point that I think it matters for all of us. The first chart you're looking at is there was an unfilled gap left from 2 weeks ago at the 4436.19 level. And today we filled that gap and closed just a little bit above at 4438. Now look at the second chart, exact same time frame. The downtrend line in effect since the peak on September 2nd essentially also comes into play right at 4435.36. Look at the third chart. The 50-day moving average, the shorter term smoothing mechanism comes into play at 4436.15. So the unfilled gap was 4436.19, the 50-day 4436.15, and the trend line. Now that's not random, right? And again, it's not a valuation, it's nothing to do with CPI or GDP. The market filled the gap, went to the downtrend line, and now the question is it able to push on? What we do have prospectively is a little minor head and shoulders bottom. I think the September highs are not going to be easily exceeded.
Wow. So we might have seen the best for the rest of the year. Carter, good to see you. Thank you so much. Carter Worth of Worth Charting. Dan, you agree?
Well, first of all, Carter redefines to the penny right in front of us at 40.36.19. That's pretty specific here. And it might not be random. I mean, the thing is like if the market was still open right now, I think it'd still be raging higher, Mel. It feels like that was the sort of reversal day that a lot of the bulls really needed to feel. Like, you know, look, here's an example. Microsoft is less than 1% from its all-time highs. You know, we're talking about a lot of constructive charts. If we're saying that a lot of the news is kind of discounted in the last month or 5 weeks price action, then it really kind of leaves you to be less bearish if you were bearish, let's say, 2 weeks ago, because if we're going to digest fundamental news better and the charts look constructive, that's kind of how I feel about it. I'm not telling you I'm playing for new highs in the market. I'd like him to be right. And we also know during earnings season, the tide can change very quickly. You know, we talked about banks for the last week and a half. There was a lot of seesaw action here. Yesterday, they looked really bad. Today, they look really good. Tomorrow, they might look really bad again. So to me, I think you got to wait a couple weeks into earnings season before a trend is made.
I mean, we talk about the setup. We talk about, you know, the run in something going into earnings season. The S&P 500, 2% off of highs, Guy. That seems like a setup that stinks going into earnings season.
You would think, but it's proven me wrong over and over again. We played Choose Your Own Odyssey a few weeks ago. I think we had like 19 different Odysseys we could choose from, and I forget which one I chose. But I'll tell you the one that I chose was I thought we'd trade down to 4,100 in the S&P and then close the year higher than the all-time high that we made earlier this year. I'll sort of stand by that, although it's really, I'm hard-pressed to sort of back that up given today's action. But I still think we're in for one whoosh to the downside, to your point about the setup into earnings. And, oh, by the way, if it was a little colder out, I could absolutely sit by a fire and listen to Carter Worth read just about any novel that he wants to pull out of his library, because he is just poetic. Amazing.
Poetic, and also the dulcet tones of his voice help also.